Why do credit products exist? Do they have certain advantages? And if yes, are there any disadvantages also that exist when it comes to the credit products? Let's understand each of these in detail. There are multiple advantages of financing your enterprise or financing a project through credit. We can list them down as follows. Number 1, asset creation. A credit product helps you create an asset. Typical example is home. Most of the people find it difficult to acquire a home out of their savings, because by the time you accumulate saving, typically the home prices have also gone up. So one of the products which is by and large typically acquired by people through use of credit or home loan is the home. Similar way, a business might want to obtain certain credit, for example by a term loan, in order to set up a large project. Another advantage of credit is convenience. For example, raising equity is not an easy job. If by a certain time in the life cycle of a business you have not created sufficient brand equity or a track record to raise money from the public, then it will be difficult for you to come to the public through an IPO and raise funds from public at large. In which case, if otherwise your business is good, you have a lot of collateral to offer to banks, you might go to the banks and raise funds by way of a credit. So credit could be at times more convenient to raise, less costly to raise as compared to the equity. One more advantage of credit products is wealth maximization. In case your return on investment of money that you make is higher than the cost of debt, in that case, by taking the credit, you are actually increasing your ROE or return on equity. So you can maximize the wealth and you can create big assets by taking certain funds on credit. Let's say if you are able to set up only 10 crores of project through your own funds, maybe you go for credit of let's say 8 crores and set up a project of the size of 18 crores, which might help you in build certain economies of scale. Economies of scale are fundamentally the advantages that you get because you have a business of a particular size. For example, you might be able to negotiate better terms with the vendors, or you might be able to obtain the land at a better rate because you are purchasing the land of a bigger size. Credit might also help you retain your control on business. When you come out with let's say an IPO and issue shares to people at large, or you take somebody into an equity partnership, you are losing certain degree of control on your business. The other people who are coming in through equity are also part owners of business. In case you do not want to see too much of control on your business, you might go for credit instead of getting the funds through equity. Credit can also help you build a size very fast. For example, there have been instances where smaller companies have bought larger companies using something called leveraged buyout. So they have taken a very large amount of debt, acquired that large company and paid off that debt out of the assets of that large company. Now this is a very risky strategy. It is not a fail-safe strategy, but still there is a way to grow your business very fast using the credit or a leveraged buyout as a mode of financing. Credit has one important impact on the economy. By increasing the credit supply, the central bank can boost the demand. When the funds are available adequately, people will be generating demand for the products and services, which will in turn create the supply of goods and services, thus kickstarting the economy. There are cases when the economy is entering into recession or is already into recession, and the governments have successfully kickstarted the economic cycle back and put economy on the growth path by using monetary intervention in the form of credit, which is basically handed out to the banks. If you look at it from the investor's point of view, the credit products like bonds, for example, or government treasuries or government bonds help the public at large to diversify their portfolio and reach a certain level of risk return optimization. Credit is also used as a means of tax planning because the cost of credit or the interest that you pay is allowed as a business expense. Therefore, the business gets a tax shelter when they pay out the interest, whereas the tax shelter is not available for dividends because dividend is paid out of the profits that are made, which are taxable, and is paid to the owners. So we looked at the advantages of credit, but there are certain disadvantages also in credit products. Let's look at those disadvantages in detail. Number 1, reduced profitability. Number 2, possibility of a reputation risk. Number 3, potential of bankruptcy. Number 4, creation of propensity to overspend. Number 5, risk of overinvestment. Number 6, potential for reckless management. Number 7, higher impact of adverse events. Number 8, possibility of economic disasters. And number 9, potential for inflation and hyperinflation in the economy. Now let's look at each of these in detail. The credit products might reduce your profitability. If the return that you are making on investment of your equity plus debt products is less, let's say it is 8%, whereas cost of your debt is 10%, then obviously the debt is eating into the profits that you are already making, and therefore the debt is reducing your profitability. Credit products can create a reputation risk for you because servicing of the debt is obligatory. You must pay back the amount when it is due, and before that you have to service through coupons or interest. If you fail in payment of interest on time or on repayment of debt, obviously your reputation will suffer in the market. Whereas if it comes to equity, not giving dividend to the equity shareholders because the company needs it at times need not necessarily impact your reputation in the market. Credit also creates a potential for bankruptcy because if you fail in the repayment, then the creditors or the lenders can take you to the court of law and you can be declared bankrupt. Credit might at times create the propensity to overspend because when the funds are obtained on credit, there is not much of a skin in the game for the owners. So owners don't have much of equity, let's say, in the business, but the credit is more. So in that case, even if let's say business goes bust, it is the lender who is going to suffer and not the owners. This is very much now a possibility because of limited liability that exists in the form of the companies. If the credit is very easily available, the owners might expand the business very recklessly and very rapidly. For example, they might get into unrelated diversifications which are by nature inherently risky and therefore difficult to manage. The owners, because they have less skin in the game, might recklessly spend the amounts, and even if let's say there is a bankruptcy, the lenders might suffer more than the owners. So the availability of easy credit might create recklessness. We have seen an example of this in the global financial crisis of 2008, where people bought lot of houses when they didn't need it recklessly because credit was so easily available. The credit has a potential to create higher impact of adverse events. For example, during COVID, a black swan event, the businesses that were heavily in debt suffered more than the businesses that were mainly equity financed. Same way, in case of natural disasters, the businesses that are debt financed are more at risk as compared to businesses that have much less debt. The credit products can lead to economic disasters. For example, the GFC 2008 is a very good example of the credit products which created the economic disasters. People heavily borrowed what is called a mortgage product. Then these mortgages were bundled, securitized and sold off using something called MBS or mortgage-backed securities. And on top of it, people bought CDS or what is called a credit default swap. These were further combined to make into collateralized debt obligations. So all these credit products created a lot of risk in the US financial system. Ultimately, a lot of players went bust. There was an economic crisis in US and it became a global financial crisis, what is known as GFC 2008, which is a distinct possibility if credit is handed out without much due diligence. Credit is typically created by the central bankers by infusing certain money supply in the system. But however, if this money supply is not controlled, there is too much of credit, then it can lead to inflation, and there is also a possibility of hyperinflation in the economy because there is too much of money chasing too little goods and services. I hope we have understood the advantages as well as disadvantages of credit very well. If you like this video, please do like and share with your friends who will benefit from this. Thank you very much and cheers.